told you guys what my views in the crypto market, right? I showed you guys what we have on the chart. As usual, this is an opportunity for you guys to submit your request. Make a request of any asset you want us to analyze in this live stream, right? Make a request, submit your suggestion. We are live right now on YouTube. We are live right now on YouTube. So I'm going to copy the link from YouTube and send in the Telegram group. So if you're in the Telegram group, all you need to do right now is to click on the link I'm going to send right now. So click on the last link I sent in the Telegram group. We are live right now. So join me right now. Join me right now. You can join me on YouTube. If you can join me on YouTube. If you want a better view, a high definition view of this live stream, you can join me on YouTube. Right? Let's go. So today we are going to talk about the market. And we're going to start the live stream straight. We are not going to wait for traders. No, we are not going to wait for traders. No, I told you guys you always have to be right here on time. No, time is important. Let's keep to time. We all know the time we are going to be right here. We all know by 12 p.m. we have to be right here. So in the next 6 minutes, we are going to start the live stream. So there is an opportunity for you guys now to make your suggestion. Any asset you want us to analyze in the live stream, start submitting your suggestion, right? So I have mine as well. So if you are watching from YouTube, you can make your suggestion, submit your suggestion, any asset you want us to analyze in the live stream, right? Before the live stream gets congested, make your suggestions, submit your suggestions before the live stream gets congested, right? So do that right now. Do that right now, right? I'm waiting for you guys. Start submitting your suggestions. Submit your suggestions, assets you want us to analyze. We have just 5 minutes to start. We have 5 minutes to start. So if you have any asset you want us to analyze, just make your suggestion through the comment box and we go through them. We analyze them together. That is why we are right here. Okay, so start submitting your suggestion. Let's go through the market. Let's go through the market. Let's see what we have in the market. Right, start submitting your suggestions. Let's go viral. Share the live stream. Share the live stream. Submit your suggestions. Let's see. Okay, we have GBP USD by Chiles. GBP USD by Chiles. Chiles, are you a member of this live stream? Are you a member? Have you followed my profile? And please comment your country. Chiles, where are you streaming from? Your country? Where are you streaming from? Please comment your country. So the first trader who made the request is Chiles. Chiles requested for GBP USD. So Chiles, where are you watching from? Where is your country? Where are you streaming from? Where are you streaming from? Right? Right, guys. Submit your assets. Submit assets you want us to analyze. Okay. Chiles is from Nigeria, from Abuja. Wow, that's great. Thank you, guys. Thank you, guys. Thank you, Chiles. Thank you. So we need more traders. No, guys, submit your traders, submit your assets, submit assets you want us to analyze. Okay, very dark boy requested for XRP USDT. Okay, very dark boy. Very dark boy. All right. And very dark boy, please comment your country of streaming. Where are you streaming from? Very dark boy, where are you streaming from? Comment your country. Where are you streaming from? Very dark boy. Right, so traders, start submitting your requests. Any asset you want us to analyze, start submitting. Submit, right, before the live stream get congested, right? So submit. Okay, Very dark boy as well from Nigeria. Seems we have a lot of traders from Nigeria and in Abuja, from Abuja today. Wow, that's wonderful. Thank you, Nigerian traders. So we have XAU paired against USD. That is a gold. Your that is from Michael Leonardo. Okay, Leonardo, right? Am I right? Okay. And where are you from, Michael? Where are you from? Comment your country. GBP yen from a trader from Kenya. Okay. Priced by Charlo from Kenya, right? Kenya. So Michael, where are you streaming from? Okay, Lagos, Nigeria. Wow, we have a lot of traders from Nigeria today. Nigeria, wow, that's great. Okay, right. And please traders, submit more. We have 2 minutes to start the live stream. 2 minutes to start the live stream. 2 minutes more. 2 minutes more. So traders, if you are in, submit your, make your suggestions. Submit any asset. Make any. You can also submit your request from YouTube. If you are watching from YouTube, you can submit your request, right? So if you want to have a better view of this live stream, all you need to do right now is to click on the link on my bio. Follow the instruction right here. Once you click on the link on my bio, you see the Telegram group. Click on the Telegram group, and once you get into the Telegram group, you will see the link, the YouTube link in my Telegram group. So from there, you can access my YouTube page in order to have a high definition view of this live stream, right? So submit your asset, submit any asset you want to analyze in this live stream. And take note, guys, we're gonna go through the forex, commodity, right, stocks, right, index, right, and the crypto market. So if you're a trader in the forex, commodity, stocks, index, crypto market, then this is a live stream for you. So if you're a trader in the stock market, you can make a request of any assets or any stock of company you want to analyze in the stock market. If you're an index trader, you can submit your asset. We go through. If you're a crypto market trader, make a request, right? So thank you, guys. So we are about to start the live stream right now. Okay, so thank you, guys. Today we are going to go to the market as been requested by traders, which is the 22nd of November 2023. Today is Wednesday. And we all know, market tend to have decision during Wednesday, Thursday, Tuesday. This Wednesday, especially Wednesday, Thursday, the market is usually busy, right? So the first asset being requested by traders in the live stream today is GBP USD, requested by Chile from Nigeria, Abuja. So let's go through the GBP USD. Let's see what we have on GBP USD, right? So here comes the chart of GBP paired against the USD, which is the weekly chart. The weekly chart is bullish. The weekly chart is bullish, and based on what we have on the day chart, the day chart as well is bullish, right? And I told you guys my what I'm actually looking at for in this market. I told you yesterday, for those who attended your yesterday live stream, my analysis is still the same thing. So first, we have price rallying from the low swing. I'm gonna have to enable my pen. So let me enable my pen. Right, so price rallied from the swing low right here. You can see the swing low, and the price rallied to this. Price is currently trading at the high swing, and you guys can see we have a what we call a rising channel, right? So we have a rising channel right here. We had a rising channel right from the swing low. That was at the price of the 1.21123. That is the swing low in this market, right? We have the swing low. So some traders are making complaint they can't actually see the live stream from their end. If you can't see or get access to the live stream, try to refresh your browser. Refresh your browser, right? Refresh your browser. If you're unable to get access to the live stream, maybe on YouTube, you have to refresh your live stream, right, guys? So refresh your live stream. Refresh your live stream, all right? So we have a swing low right here at the price of the 1.21123. and later we have another test of a higher low swing right here. You can see we got a higher low swing, and at this medium right here at the bottom we got a lower low, and at this medium right there we could tag this level right here as a higher low, but what we got right here, it's a lower low. So in combination together, based on what we had at this swing low right here, we had what we call a double bottom. You can see we had a double bottom in this downtrend. This was the first bottom and the second bottom. So this second bottom resulted into a bullish rally. So this is the first pattern which gave us the reversal of this strong downtrend to an uptrend. So after we got that, price made a pullback to this, could have a higher low swing right here, and the price rallied up. I told you guys I'm not a fan of jumping into the trend at the high structure. So for those who want to jump in right here, it's not my kind of thing, and I don't think as a trader you should do that, because if you do that, your risk will be kind of higher than your profit probability or profit ratio. So you don't do that, right? Actually, I told you guys how I got an entry setup right here, but I never took this trade. I ignored this trade right there based on the risk to reward ratio. If I'm gonna make an entry based on this candlestick right here, the risk is higher than my profit ratio. This is what I mean by risk to reward ratio. We have a support structure. We had a support structure at this level. This was a previous broken support structure right here. That was at the price of the 1.25900, which is actually a cycle level. And we have another test of support and a broken of support right there. So this level has a higher tendency to act as resistance for price. It could act as resistance for price right here. You can see it does acted for likely support, but it was broken right here. You can see that. And at this zone right here, it was a support for price. So this level could act as a resistance for price. So this is why I actually let go this bull setup right here based on the risk to reward ratio. So zooming in, if I'm going to be making a long entry, I'm going to be looking to buy this bullish outside bar, which engulfed the doji candlestick. And I told you guys, doji candlestick actually mean point of indecisions in the market. So the market was in a state of indecision right there. But the next candlestick, which actually formed on the 17th of November, which was last week Friday, actually gave us the actual direction of the market. It signaled the actual direction of the market. So we had a view that yes, the market has a probability of moving to the uptrend. But after I analyze the risk to reward ratio, because if I'm going to be making an entry based on this bullish candlestick that formed on Friday, if I'm going to be making an entry the following week, I need to have my stop loss at the low of this bullish candlestick that formed on the Friday. And if I'm going to be targeting to the resistance structure right here, I am not going to have the room to have at least a minimum of 1.2 risk to reward ratio. So this is why I ignore this trade setup right here, right? Because actually, whenever the market opens, I don't want to make an instant entry. I want to see how price will react based on last week's price actions formations, right? So this was the candlestick that formed on Sunday. If you made an entry right from Sunday, candles, the 4-hour close of candlestick on Sunday, if you're gonna make make an entry based on the first 4 candlestick that formed on Sunday this week, which was on the 19th of November. The market opens on Sunday. That was around 11 p.m. because the market right now, the time zones has changed in London. The London right now are I think they are 1 hour behind. They are 1 hour behind. The time right now in London is 11 p.m. 11 p.m. and yes, 11 p.m. right now. That's 11:07. 7 minutes after 11. Oh, sorry, a.m. I mean a.m. The time right now in London is 11 a.m. Whereby the time right now in West of Africa is 12 p.m. So there's difference right now. So by the time the market opens in London, that was on Sunday 10 p.m. It was 11 it was 12 a.m. No, it was 11 p.m. I mean, in West African time, 1 hour behind, right? So 10 p.m. Sunday time, London time, it was 11 p.m. at West African time. So if you were to take this candlestick right here based on the close of 4 hour candlestick that formed, so this 4 hour candlestick closed after the next 4 hours. So that would be around from 11, 12, 1, 2, 3. That would be around 3 a.m. 3 a.m. That would be 2 a.m. in the London time, and that would be 3 a.m. in West African time. That was a 3 a.m. Monday morning, and the 2 a.m. Monday morning London time. So if you were to take this entry based on the 4 hour candlestick, and I told you guys the best thing to do is wait for the close of candlestick. If you are an intraday trader, wait for the close of candlestick, maybe on the 1 hour candlestick close or the 4 hour candlestick close. And you all know I like to take the close of 4 hour candlestick. So if you are to make an entry right here and they have your stop loss, the best zone to have your stop loss would be at the low swing right there, because you are actually trying to take the formation of a double bottom on the 4 hour chart, because this is double bottom on the 4 hour chart. You can see that, and this is the entry confirmation of the double bottom. So if you are trading a double bottom, your stop loss should be at this zone right here. You understand that? Now if you made an entry right here, you can see your risk to reward ratio is 1.24. Your risk to reward ratio right here is a 1.24. That is before the price get to the resistance structure right here, which is kind of not encouraging at all. So it means right here, the risk is higher than the profit probability. So let's get to the day chart. On the day chart, you can see the point of entry and the next key level structure, which acts above. So this is why I ignore this trade setup right there. So the risk to reward ratio, the risk is higher than the reward. So what I'm going to be doing right now as a trader is I want to look out for a pullback of price. If we can see a pullback of price all the way down to a better swing level, maybe a price to the pullback of the previous. Okay, let's get all these trends out right here. So maybe if you can see a pullback, we have a key level structure at this high swing right here, all the way to the left side. You can see we had a higher high swing right here. Higher high swing, and then we got a support structure right here, right? So if price can make a pullback maybe to this level right here, we'll be looking out for a strong technical buy. Alternatively, price could still make a pullback all the way down to test the rising trend line we have in this market. Remember, we have a rising trend or a rising channel. We have a rising channel. So the key idea right here is if price can make a pullback whereby we have a pullback to the lower channel of the rising channel, maybe to this structure right here, then that means we could have a point of confluence zone. This level right here actually is a support for price. Here is a support, and this level of the lower band of this channel will be another support for price, because it's a lower test, is a test of the lower band. Likewise, if you can see a strong technical long signal bar right here, that would be nice. And then application of our Fibonacci retracement to also reveal to us that if price can make a pullback, we could have maybe like a 0.5 or 0.618 Fibonacci retracement level. So there is a lot of strong confluence factors right there, which could interest more buyers, more bulls to pull price to the upside. So this is my view on the GBP/USD. Alternatively, if the price should fail to come down and the price break above, we need to see a test of this level above to act as a new support for price. This is what I mean as a test of structure. You can also see on the chart we have a support structure right from the swing right here all the way to the right hand side. So if price can make a break, of this resistance structure, we need to look out for a pullback to test that, okay, yes, this is a new support for price before we can pay for a continuation to the upside. So these are the two scenarios on how you can approach GBP paired against the USD. Visuals, good afternoon. So these are the two ways you should, I am currently looking out for trade opportunity on GBP USD, right? Because I'm a swing trader, not a scalper, right? This could sound different or no, in a different way to scalping and day trader. But as a swing trader, this is the way I think the safest way to trade this asset, right? So that is my view on GBP/USD Chiles. I hope my analysis was helpful, right? Chiles. On the next, let's check on XRP USDT. XRP USDT. So let's go through XRP USDT. That is a cryptocurrency market. Cryptocurrency market, based on what I can see, I know a lot of traders are going to be worried that why should they wait for the market to make a pull down? You know, in trading, you need to exercise patience. There is much more money to be made when you wait for the right time. When you wait for the right time in trading, I always emphasize on I always encourage traders. You need to learn how to build patience in trading, because in trading you don't chase opportunity. You wait for opportunities to come to you. That is what rules the trading world. That is how to approach the trading world. You wait for opportunities to come to you. You don't chase opportunities in trading. If you chase opportunities in trading, that means you are chasing the market. And if you chase the market, you always get things wrong, because in trading you don't chase the market. You wait for the market to come to you, just like a sniper, right? You wait like a sniper. You patiently wait like a sniper and let the market comes to you. You don't chase the market, right? So now let's check out what we have on XRP USDT. So based on the weekly chart, this is what we have on XRP USDT. We have a potential key level structure at the price of the 0.5507, right? So for those of you who are watching, this is how your chart should looks like. If you are a trader in the cryptocurrency market, if you are currently looking out for trade opportunity on the Ripple, this is how your chart should looks like. These are the key level structures you should have on your chart. So if you are a cryptocurrency trader, you can just screenshot this chart right now. Make a screenshot of this chart. Make a screenshot of this chart, right? If you are a trader in the cryptocurrency market, make a screenshot of this chart, right? Because this might be helpful for you. You are welcome, chillers. So right now we add a key level structure at the price of the 0.507. So what I'm going to be looking out for as a trader is I want to see how price is going to react to this key level structure. You can see we already add a lot of bearish sentiment. I told you guys, whenever you have a doji candlestick after a bull swing, it does signify point of indecision. It means any of the two participants can dominate the trend. And currently right now, price is closing. Price already is trading below the low of the doji candlestick. You can see price right now. So as a price action trader, I want to see how price is going to react to this major key level structure right here. Maybe it's going to serve as a support or maybe a test of this trend line. So the two ways I'm going to be looking to approach the Ripple, if I were to be an investor on Ripple, I will be looking out for trade opportunity at the test of this trend line in combination with this horizontal structure right there for a strong technical signal. But if I'm going to be looking for another entry on XRP, but you guys have to be very careful. You have to be very careful if you are looking out for long entry on Ripple. Why should you be careful? You should be careful because the last bull swing failed to go higher. You can see the bull swing we got right here failed to close higher above the higher high swing we got right here. You can see that. Even though the high we got right here failed to close above this high, it was at the same level, which does signifies clustering of price. Whenever price tests a key level structure within a short period of time, it does suggest that key level structure is weak and price has a higher tendency to break above. This is what actually happened right here through this strong bullish candlestick. So the continuous test of price at this structure right here within a short period of time signify the weakness in this resistance structure, and this is why you see breakout. So whenever price as well fail to go above the previous higher high in the bull trend, it signifies there's a weakness in the bullish momentum. So if you want to be going long right here, you have to take note that what we had right here is a low high swing when compared to the previous high swing, higher high swing we had right here. So if you want to be looking out for a long entry right here, you have to be very careful. You have to see a strong technical signal and then reduce your position size, because you can never compare the kind of pattern we got at this level right here to the level right here, because this is a low high swing, whereby this is a higher high swing. So the pattern we got right here signify there was a strong bullish rally in this trend, right from the swing right here. The bulls are actually dominating the trend to an uptrend. So based on the swing low we got right here, it signifies the bears are active and the bulls were unable to pull price above to this or to test this higher high swing right here. So if you want to be looking out for a long entry, you have to be very careful at this structure. So my advice is reduce your position size, because price might move up to carve another low high swing, like it did right here as a low high swing, and this could signify a descending trend line. And a descending trend line, this could lead into into a descending trend line. You can see that. So if price can make a retest and form a low high swing right here, this will signify bearish sentiment formation, and this could interest many sellers to put price all the way down on the price of Ripple paired against USDT. So you have to be very careful, right? So that is my view on the Ripple. So if price can make a strong bull signal right here, a strong technical buy, a strong technical long entry, reduce your position size, because price could gravitate up and then carve a low high swing like we did right here. And if price will break down, then price needs to test the structure as a new resistance for price for a more downtrend. So if you can see that right there, it means the rally on Ripple is gradually changing into a downtrend for a more downtrend to the downside, right? So this is what I can see. So the two scenario right here is there could be a bull breakout right here, or a breakdown to the downside, or a break from this level right here to the downside, right? So these are the two scenarios if you are trading the Ripple, or if you want to accumulate Ripple, right? Thank you. So that's what I have on Ripple. Now let's check on gold. Someone said visuals requested for NASDAQ. Okay, we have NASDAQ by NAS 100. Okay, by visuals. Visuals, please comment your country. Comment your country. So this is what we have. Now let's check on gold. The next asset is gold. If you're in the live stream, you can still make a suggestion of assets you want us to analyze, right? So let's go through gold. So here comes the weekly chart of gold. If you are a trader in the gold market, I want you to have a view of this screen right now. You could screenshot this chart. If you are a trader in the commodity market, gold is actually in the commodity market. So for those of you traders who trade commodity market right now, I'm gonna give you a few seconds for you to modify your chart, make a screenshot. If you are a trader in the commodity market, make a screenshot of this chart right now. Okay, so waiting for you guys to do that right now before we proceed with the analysis, right? Screenshot the chart before we proceed with our analysis. Do that right now. Okay, waiting for you guys. We have a few seconds. Right, I believe you guys have made a screenshot of this chart, right? Now let's go to what we have on the weekly chart. So here comes the weekly chart of gold. I told you guys, whenever price is formed at a resistance structure, it does not justify a reason to long. It does not give you a reason to go for a long entry, right? I told you guys, whenever price formed at a resistance structure like we did had right here, because there was a pin bar, this doesn't mean you have to short. Likewise, when price trade at a support structure, that doesn't mean you have to short. There are a lot of factors you have to combine. Okay, visuals from Kenya, thank you. So there are a lot of factors you have to put into consideration whenever price form at a resistance structure. So all these conditions were not meant on this at this level on gold. That was why we had a bullish breakout. So right. So the question right now is, what is gold up to? So currently gold is trading at a high swing in the market. Gold is currently trading at the previous high swing we had right here. We had a high swing right. Okay, I'm gonna get this off. We had a high swing at the price of the 2006, right? So this level right here is a high, and the price is currently trading at this high. If you are good in technical analysis, you know it is not advisable to make a long entry at a high or at a minor structure of resistance. or at a supply structure. You don't look for long. You should be looking out for a short entry at this level. But that doesn't mean you just have to make a short entry without putting into consideration factors that can tell you to go ahead. All right, so now let's go on the 4-hour chart and see what we have based on the trend. So based on the trend on the 4-hour chart, this is what we have. So price is still in an aggressive or bull or market structure. So this is a low right here. We got a higher low swing right here. We got a higher low swing right here. We got a higher low swing right here. And price is at this level. So if you are looking out for a short entry right here, what if the market makes a downtrend and then continue, and this level forms a higher low swing right here? So you have to think about that, because if you're going to be making a short right here, if you are making a short right here, what does the market gravitate down and continue a higher low structure, just like the way it has been repeating right here? You can see that. So this is why you have to be very careful. So if you want to be looking out for a long entry right here, study to see how price is going to react to this level. If I were you, I won't make a long entry right here, because price could still get to this level and then form a double top and then break to the downside. What about that? Yeah, that could occur in the market and form a double top for a reversal to the downside. So if I were you trading gold, I will be interested to see how price is going to react to this trend line. Maybe it's going to be a break to the downside, a retest for a rejection to the downside. Alternatively, maybe a break to the upside and then a retest and then continue right here as support for a continuation of the uptrend. So these are the two ways I'm going to be looking at for trade entry on gold. So in summary, let me show you what you should be looking out for on gold. So in summary, there are three possibilities on the price of gold. Price could make a pullback right here, break out, make a retest, and continue to the downside. Number two, price could make a breakdown and then continue for an uptrend, right? Number three, price could make a breakdown and then hit to form a double top and then break to the downside. So these are the three scenarios. So in summary, you should be looking out to see how price is going to react to this trend line right here, right? Monitor this level. This is a point of action for buyer, for traders who want to long and short on gold, right? Thank you. So that is my view. But in summary, I will be looking out to make my trade decisions on the lower time frame based on price actions I can see on the higher time frame. So based on what I can see on the higher time frame, based on the day chart, the day chart is giving us a lot of strong technical long or long setup. Can see price broke a resistance structure right here. We have a level structure based on the day chart. This was a resistance right here, resistance right here, support right here, resistance right here. Price broke this resistance. So let's hope this level will not form as a double top for a downtrend. If that does not occur, then it means gold is rallying up to test the highest peak in its historical price action, which is the 2064.821, right? So that is my view on gold. If I were you, based on the swing trading strategy, I'll be looking out to see how price react to this level, minor structure, and the trend line below right here, right? That is a point of interest for me. So let's check out what we have on GBP paired against the JPY. Someone said, I prefer Analyis to trade on DeFi market trade because of the probability analysis. So let's check out the GBP paired against the JPY. So let's go to GBP paired against the JPY. GBP paired against the JPY, this is what I have on my chart. So if you're a trader on GBP paired against the JPY, now you can screenshot this chart right here before I proceed with my analysis. Screenshot the chart before I proceed with my analysis, right? GBP paired against the JPY, because most of the time after I'm done with my analysis, traders still come and ask me for key levels. What are the key levels? What are the key levels you have? And this is why I'm trying to change the key levels on this chart to be a bold line so that you guys can have a better view of this key level structures I'm watching out for in the market. And they take note, these level structures are not a holy gray zone, because this is why most traders, this is how most traders treat key levels. Once they see a key level, especially from a pro trader, they think that level means they buy, to sell, to short, to long. No, it doesn't mean that way, right? So there's a way you treat key levels. So these are the key levels I have on GBP against the JPY. These are the key levels right here. You can screenshot this chart. So now let's check on the day chart. Based on the day chart, the market rally on the GBP yen is still in a rising bull trend. The market is in a rising bull trend. You can see that the market is in a bull trend. So you don't need any indicator to tell you if the market is rising up. You don't need any indicator to tell you this, right? All you just need right here is apply your trend line to measure the flow of market structure. So based on what we have on the day chart of GBP paired against the JPY, if you ask me what is the market trend, this is the low swing right here. We got the low swing right here. We got this low. We could call this, we could tag this right here as the higher low swing, because it actually went above this low swing right here. All right. But I am not going to call this level as a higher low swing, because what I can see right here to me is like a kind of a choppy market. So there isn't much swings right here. So we could just refer to this level right here as a point of accumulation. This is an accumulation phase right here. So it's another topic in technical analysis. This is an accumulation phase, whereby the institutional traders, the hedge funds, the insurance guys, the big players in the market accumulated this asset at a lower price, and then then later, after price broke out of this rectangular phase, it resulted into a mark up. So right here is what we call the MP. I mean mark up, that is a MU, mark up phase. So right here, I think what we add right here is the consolidation phase. So this consolidation phase as well could be tagged as a distribution phase or as another accumulation phase for the continuation of the uptrend, right? So what we need to do right now is we need to study the market structures on this price chart. So based on what we have right here, based on the flow of market trend, the market is still in a bullish trend, right? So for those of you who are looking out for a short entry, you have to be very careful, especially if you are a day trader, a scalper. And this is why most scalpers and day traders lose money, because as a scalper, you should be trading in the direction of the higher trend. As a day trader, you should be trading in the direction of the higher trend. So if you are, as a scalper, as a day trader, if you are looking out for a short entry on this trend right here, you are playing against the trend. As a day trader, if you are looking out for a short entry, you are going against the trend, right? This is why most scalping and trading strategy fail. The best way to use scalping and day trading is to trade in the direction of the higher time frame. So if you are a scalper, check out what is going out on the 4-hour chart or the day chart. If you are a day trader, check out what is going out on the day chart and tend to follow the direction of the day chart. So the reason why most swing traders tend to have more profit than day trading and scalping is they have enough time to analyze the market, and they tend to have a wider stop loss, right? And they tend to ride the market based on long-term goals, right? They focus on the higher time frame. They tend to see the bigger image, not the noisy structures on the lower time frame. So based on what I can see right here, I can try to connect another trend line from the high right here all the way to the structure. So the question right now is the market trying to form a rising wedge. So as a swing trader, what I'm going to be doing right now as a swing trader in this market right here is I want to be studying to see how price is going to react to this pattern right here. Maybe price is going to break out of this rising wedge down and make a retest for downtrend. Or maybe price is going to break to the upside, make a retest for the continuation. So these are the two scenarios I can have right here. So if you are a day trader and a scalper, if you are trying to trade within this medium right here, it means you are trading in a ranging medium. You are trading within the middle of a trend. And you all know what happens within the middle of a trend. This is a resistance structure right here, and this is a support structure right here. The best zone should be looking at for short is at this structure, right? And the best zone to be looking for a long entry is at support. So if you are making an entry at the middle right here, It means you have divided your profit ratio and then multiply your risk in the market. If you are taking a trade within the middle of a trend, you have divided your profit ratio. If your profit ratio is 2, it has been divided into 2. If the profit ratio is 4, it has been divided into 2. And your risk has been multiplied by 2. Not until you understand these factors, technicalities, mathematics in trading, it's going to be very difficult for you to be a profitable trader. Right? So when you take your trade at the extreme resistance for a chart, you reduce your probability, you reduce your risk and increase your profit probability. If you take an entry from a support, you reduce your risk and increase your profit probability. But when you take a market at the middle of a trend, you increase your risk and reduce your profit ratio. So that is the disadvantages of taking the trade within the middle, right? So that is actually what is going on right here. So if you're a day trader, if you're a scalper, if you are trading within this medium right here, then you don't actually know what you are doing, because if you take your time to check what is going on the higher time frame, you will know at this zone right there is a no zone area, no trade zone. There are zones in the market which are called no trade zones, no trade zone. So if you try to trade at this zone right here, you are putting yourself in a risky trade. This is the NTZ, no trade zone. At this medium, you have to stay out of the market because the market will consolidate. You can see that. So imagine traders who made entry at this medium right here. The market consolidated, and then took them up and down before it eventually continued in the upward direction. Imagine the market setup right here, consolidated, continue. You can see that. So at this medium right here, you shouldn't be looking out for a trade entry. The best way to look out for trade entry is after the market has made its decision. After the market has broken up to the upside, then it shows you it's going up, or maybe after it has broken down, make a retest that it is going down. So these are the two ways I'm going to be looking at to approach this asset. If I can't see that, then I have to stay out of that asset and focus my attention on that currency pairs. So this is one of the reasons I trade a lot of currency pairs, right? I do not just trade currency pairs because I want to trade. I trade different currency pairs because I want to look out for the best setup with the lowest risk with the highest profit ratio, and the setup that has the simplest technicalities. If I see a market is good and nice, but it is complex, I will divert my attention to a market which is simple and nice, can give me what I'm looking out for, right? So this is my view on the British pound sterling JPY. So if you're a trader, you can screenshot this chart right now and then try to connect this pattern on your chart. This is what you should have right now on your chart, right? Do that right now. You can do that right now. And then there is another possibility of a channel. So, sometimes we can have multiple patterns, chart patterns, formations in the market. If you don't want to have this channel right here, you could have another channel. You could have a channel maybe from the low swing right here to this high swing right here, and then connect this nose channel up, right? So if you delete this node rising right here, and then you have this channel, you can have this channel right here, and then have this channel. You can see that. So we have a channel. So you could have a channel right here as well, which means you are trying to use the channel to track the price fluctuation. Can see that? Can see that? So you have a channel. So if you are trying to trade right here now, you are trading at the middle of this channel. So you should be looking out to go for a short entry at the test of high. Anyways, if you want to make an aggressive entry right here, you could still make an aggressive entry or to down. But the reason why I think it's not best to make an entry is based on what we have based on the trend rally from the connection of our trend line from this structure right here to this structure right here to this structure right here. This level could still have for a test of support for continuation. You can see we had a multiple test of this trend line. It takes 2 points to construct a trend line, right? It takes 2 points to construct a trend line. You can just construct a trend line by connecting 2 points on the trading chart. This is a 2 point, and then you construct your straight line. But it takes 3 points to confirm what? A trend line. So to confirm a trend line, it takes minimum of 3 points. So if you have this, then you can extend your trend line all the way up, then you know, okay, this trend line is confirmed, right? So based on what we have right here, you can see right from the swing low right here, we constructed our first point to our second point. So we got the confirmation at the third point right here. So it is likely price could have a test of the 4th point right here to gravitate up. This is why I'm against trading this short entry right here. So this is the 3rd test right here, 2nd test, and the 3rd test right here. So you have to be very careful, even though you have a channel, because I know some traders might think, oh, we have a channel right here, so why can't we just trade a channel? Because I know some traders will say, okay, I have a channel right from this high right here, and I have another channel right here. Then I should be looking out to make a short entry right all the way to the downside. If you are doing that, then it means you're not putting into consideration the trend line we had right from this structure all the way down. You can see that. So these are the trend line we have right here. Have it all the way up. So this level could see add as a support for price right here. So this is what I have on the GBP paired against the JPY. So before I make a trend decision, before I trade in the market, I always look out for factors that can disrupt or that can serve as an hindrance to my trade setup. So I try to define factors that can serve as an hindrance to my trade setup. If the factors is higher than the factors supporting my trade setup, then I have to ignore that setup, right? So that is what I have on GBP paired against the yen. But if you are an aggressive trader who wants to make an entry, if you want to make an entry based on JPY, because I know some traders are not gonna actually support my idea right there. Some traders are gonna be looking to short, because some traders are actually very stubborn. So if you are that stubborn trader who wants to make an entry right there, just know, based on what we have right there, the trend is still what? The trend is still bullish. This is a higher low, right? I'll just get this off. So if you want to make an entry, this is a what? Higher low. This is a what? Higher low. This could be another higher low. So the best zone to have your stop loss is this higher high. So if you are making your stop loss should be higher high. Don't think you can make your stop loss right here, or maybe you have your stop loss at this. No, your stop loss should be right here. Okay. Now, if you have your stop loss right here, then your daily profit has to be at this support structure. So if you cannot have your stop loss at this high, don't try to blow or waste your money. Because if you do that, you are just trying to give your money to the market. Because you need to place your stop loss above the last high swing. That is the safest place you can have your stop loss. And if you're having your stop loss to this trend line right here, that is like 1 risk to reward ratio. So you have to place your stop loss all the way down. And how sure are you price will be able to break this ascending trend line? So ask yourself that question, right? So let's go to NASDAQ. Let's go to NASDAQ. NASDAQ. So we got NASDAQ right here. Someone said NASDAQ has broken the trend line or what? I can't know. Someone said NASDAQ. Someone said my NASDAQ broke the trend line and it's like it's going for a retest. Kindly inform me, please. Actually, this is what I have on NASDAQ. When price breaks a trend line, it doesn't mean you have to trade instantly. There are a lot of situations whereby price will break a trend line and still continue up, right? Just because price has broken a trend line does not give you a guarantee to look for short or long entry. Let's examine this right here. So price broke this trend line and you think this is a break. Bro, this is not a break. If you are looking out for a break, you have to see a long bearish candlestick. And this is why you guys need to go to still learn more about volume, the importance of volume in technical analysis. Most of the time, one of the reasons patterns fail, trend line fail, and you think trend line do not work, pattern do not work, key level do not work, is because you guys do not blend this level with volume. For a level to be broken, there should be an obvious volume, a volume that is different from the previous price actions. Now I'm going to show you what I mean by volume right here. Right? Now let's get this off. So as you can see right here, this is a resistance, this is a high. Right? This is another high. Right? This is another high right here. Right? Now I want to ask you guys questions. Can you guys just give me a comment? I need comments. What is different between breakout at A right here? This is breakout A. Breakout at B right here. point B, and the breakout at C right here. Please guys, what are the differences? What are the different things you can see right here at the point A, B, and C? What are the differences? What are the things you guys can notice right here? Please let me know. I need answers. What are the differences between point A, B, and C on this chart? Okay, I think I'm going to zoom in. Let's zoom in so that you guys can see properly what I am talking about. For those of you, especially who are watching most of you are watching from what do we call it? Most of you are watching from TikTok, right? Because if you are watching from TikTok, you will not be able to see a better view of this chart. So let's just try and okay, I think this is good right now. So I'm gonna just try to make my drawings once again. All right, so we have this point right here, another point right here, another point right here, another point right here. Now I'm gonna tag it again. We have A right here, we have B right here, we have C right here, and we have at this point right here D. Now guys, what is the difference between all these points right here? What are the differences? Right? What are the differences right here? So I want answers in the comment section. Answers in the comment section. Let's go. So these are the importance of volume. You can see right here at point A, we had a strong bullish candlestick. This is why this eye right here was being able to clear off. And right here as well, we have a strong bull breakout. This eye was cleared off. We have a strong bull bar right here. This eye was cleared off. We have a strong bull bar right here. This eye was cleared off. And the right here, there wasn't strong bull breakout out of this eye. And after the price even broke out with a small bull candlestick, later there was a reduction in bull interest. So this is based on volume analysis. And this is why most traders actually get into the wrong trade, because you guys don't implement the importance of volume. This is volume in technical analysis, the importance of volume. So whenever I want to make a trade, I always put into consideration a lot of factors, not just break out of key level or whatever. I put into action. Now, the question right now I'm going to ask you now, the breakout of this trend line, was it accompanied by volume? No. Price just tested right there. The price stopped at exactly like the tip of this trend line. This is what we had right here. So if I'm going to be looking out for a breakout of this pattern right here, I want to see a kind of a strong candlestick that's going to go all the way down, at least hit this support, then give me a sharp rejection to the downside. So this is when I'm going to be looking at, okay, this level right here has been broken. So what you have right here is not a breakout. If you try to take this right here, imagine you've taken this trade with the hope this is a breakout. You can see what the market is trying to do right now. The market will just continue upward and go up. So this is what we call a false breakout, fading the breakout, false breakout in technical analysis. So the market will continue, and then what next? We adjust our trend line. So that is why most traders believe trend line does not work. Trend line works. You are the one using it the wrong way. Most traders use trend line the wrong way. ABC has strong bull move at point B. At point D, we have equal high and market exhaustion. So that is it. Yeah, thank you, Raphael. So that is what we have right here. So volume is important. In fact, if you guys can understand volume in trading, this will save you guys from a lot of headaches, a lot of blowing up accounts. Volume is important. I told you guys yesterday I was looking out for a trade on JPN or 22 whatever. That was the index market. I told you guys, I told you guys I couldn't get volume. I was expecting a kind of a strong volume yesterday on JPN 225. That is Nikkei. I told you guys yesterday, I said I was expecting a short entry, but I cannot see a strong volume, right? And this is it on the 4-hour chart. This was the support. Now the question right now is, see the volume that broke out of this support right here. This isn't a strong volume. These are not the volume I'm looking out for. I'm looking out for a volume which is going to be bigger than all this price fluctuation right here. Now what later happened? You can see the strong bullish close of price above. Imagine traders who had made a short entry right here with the hope, this is a breakout. Of course, if you are trading on the 1-hour chart, you will see a breakout chart. You can see 1-hour chart. Now imagine you go to 15-minute chart. Imagine trader trading on 15-minute chart. You can see the sudden reversal to the upside. So this is why I am not a fan of chart or running my analysis on the lower time frame. You can see traders who went for a short entry. What happened? The market reverses them up and continues in the ranging medium. So guys, this is one of the reasons you have to always look out for combine factors together. So based on my technical analysis, my trading rules, one of the factors I look out for is market structure, volume in the market, right? What is going on the higher time frame? I want to know what is happening on the higher time frame, the wicks and the highs of the previous weekly bar. I want to look out for liquidity breakout zones, right? I want to look out for retracement zones, Fibonacci levels, pullback, retest strategies, trend lines, test of trend lines. How long, how fast is the market moving? That is momentum. Momentum is different from volume. Momentum is different from volume, right? So for example, right here, what we have right here, there was a fast rising market right here with a normal volume. The volume wasn't much right here, but the market was moving at a fast speed. And when the market got right here, the market went into a ranging medium. There wasn't much volume right here. The market was just going freely and then up and down, resulting in a ranging medium. But there was a momentum right here. The market was just rising up, but with a little volume. So sometimes you see a kind of market whereby the market will be rising up so fast with strong bullish candlestick, especially during high impact news or whenever there's an application of catalysts in the market. Catalysts tend to change the state of movement of prices in the market. They tend to increase the movement, the speed. So one of the factors that can increase the catalyst or the momentum or the speed of market, maybe during sudden high impact news, or maybe during activities of the big players in the market, right? So these are the things I look out for: volume, momentum. I look out for what is going on the higher time frame, market structures. All these things are very important to me, right? And I define probabilities. And the last step is I filter out trade. Filtration of trade. This is the last things. I filter out the stones. I filter out the bad structures. I filter out the less liquid, the rangy, the choppy market. No, I filter out trades and I go with the best. So guys, these are one of the ways you can save yourself from all this mess of losing trading. Of course, I have losing trading. I also have losing trade. That is inevitable. You're gonna have losing trade. But once you start implementing some rules into your trading, you have lesser losing trades. And the few winning trades you have, you also need to learn how to hold on to your winning trade and ride to them to the end, right guys? So you also need to know how to take a break from trading so that you don't go into over trading, right? So someone says check Euro AUD. All right, let's go for Euro USD. Let's check out what is going on Euro AUD. So based on Euro AUD being requested, we got a Euro AUD. Okay, this is what we have on Euro AUD. So guys, Euro AUD, this is what we have on the weekly chart. So let's try and see if there are key level structures that are important in this market before we start running our analysis. So we got a resistance minor structure above and support. Okay, let's go to the day chart right here. This is what we have on the day chart. Okay, I think I give analysis about this asset right here, how the market broke. I told you I currently had a losing trade on GBP against the Australian dollar. Actually, I moved my stop loss all the way down. So the market rallied up again and then hit my stop loss. If I had left my stop loss at the initial point, I would have still been in the market. But based on what the PAUD is trying to do, it's going to be a ranging medium market. Before it's going to break down. So I got actually I already moved my trailing stop down. I moved my stop loss, and so my stop loss entry was being reduced. So the little I lost right there is not it's not a big fund if I'd left it at the initial point. So based on what I can have on the Euro AUD. The market is still going in a ranging medium. So let's check it out. The market is in a ranging medium, like I stated right here. So we have price bouncing down. The market right here is still an up. Is it still an uptrend? Let's check if the market is still an uptrend. Okay, the market is still an uptrend. You can see the market structure is showing us market in an uptrend. You can see that. So market in an uptrend. The market is in an uptrend. So based on what I can see, the market is in an uptrend, and based on the 4-hour chart, this is what we have on the 4-hour chart. I think this is a clean chart. This is a clean chart. This is a clean chart. This chart is welcome right here. It's welcomed. And based on what I can see right here, I think it will be better to look out for trade opportunity at the trade of trend line. But anyways, if you want to make an aggressive entry based on the 4-hour chart, the break of the support structure right here, there could be a trade right here. Because first, we have a break of a structure right here. You can see that there was a break of structure right here. So if you are looking out for a short entry is possible right here, and a stop loss above this 4-hour. Now the question is the risk to reward ratio to the trend line right here. So the question now is, the risk to reward ratio right now is not favorable. If you make an entry right here, the best zone to have your stop loss is the high of this bearish engulfing candlestick, and then have your take profit to this trend line right here. So the question is, will you be able to achieve the minimum 2 risk to reward ratio? The answer is no. So if the answer is no, then in terms of technical setup, the setup is nice, but in terms of risk analysis, the trade is not good. So if you want to make an entry right here, 1.5, that is if you want to wait for a retracement, because the market is already moving down. But if I were you, when the market carved a bearish engulfing candlestick right here, I wouldn't have taken this trade because the risk to reward ratio was not good. And if you still want to jump in right now, then where should you put your stop loss? Your stop loss should still be at the high of this bearish engulfing candlestick, because the price can still rally from the current swing right here into this level to make another test before it comes down. So based on what I can see, the risk to reward ratio right here is not favorable. This is why I am not going to be looking out for an entry. If I were you, right? If I were you, I wouldn't be looking out for any trade setup right here. The best zone I'm going to be looking out for trade setup is maybe when the market can clear off this trend line. If the market can clear off this trend line right here, break this trend line, give us a nice pullback, that would be nice. And then we see have a support structure right here. I also have to analyze my stop loss and my take profit. If my TP will be right here, my XL will be right there. Now the question is, will I be able to have the minimum 2R ratio? If the answer is no, then I won't take the trade. So this is how I filter out trade. So if there are any other asset that has a low risk and a high reward ratio, then I will leave Euro AUD and look up for trade opportunity on other assets. So that's how I do in the market. Someone said gold. I already gave analysis on gold. I have analyzed gold. I will repeat myself once again because you were the one requested for it and you said you have a network issue. So that is why we analyze gold. If it were to be another trader, I wouldn't have to repeat myself. So let's go to gold. So based on what I stated on gold, a resistance acts above. So this resistance could act as resistance for price. A support acts low. That is the test of trend line could occur for an uptrend. Alternatively, if price will break this level, price could break down, make a retest of the trend line. If it can give us a low high swing, that would be nice. Alternatively, price could break above or continue upward, and then the next scenario right here is price could go down, make a test of this top and form a double top for a downtrend, or price could break down, make a retest for a downtrend, or price could break up, make a retest of this level as a new support for price and then continue uptrend. So these are the three scenarios I gave on the gold. based on the day chart, this is what we have. Based on the day chart, the strong bullish momentum is active. So let's hope if price can find a strong day technical short signal right here, then price need to break this trend line to give us a test and then a validation that this broken trend line is now a dynamic resistance for a more downtrend before we can space for a downtrend. Alternatively, price could break upside, make a retest, and turn this higher high right here as a new support for price for the continuation of the uptrend. And if that should occur, then it means gold could be willing to rally to its historical high. That is the peak. That is the price of the 2064.821. So that was my analysis on gold. Right? So in summary, if you are looking out for a short entry on gold, ask yourself, will this level act as a dynamic support or will it break? So if you are looking out for a short entry on gold, for me, based on what I can see on the day chart, I haven't yet seen a technical short signal entry. So if you are an aggressive trader who trade on the lower time frame as a scalper, as a day trader, ask yourself, if I'm making an entry right here, where should be my stop loss? Technically, the best zone to have your stop loss should be above this resistance structure right here, because price could still gravitate up to test this structure multiple times before coming down. Now, if you are going to be placing your stop loss right here and making an entry right here, now ask yourself questions. What is the risk to reward ratio, the minimum risk to reward ratio I need as a pro trader or as a trader who understands technical analysis of trading? The minimum risk reward ratio you'll be looking out for is 2R. Now ask yourself question, will I be able to achieve the minimum of 2 risk to reward ratio in this market? The answer is no. This is 1.4 risk to reward ratio. So if you won't be able to make the minimum 2 risk to reward ratio, then why should you take this trade? Because in time of risk, it is not favorable, right? So that is my view on that. So think in time of risk before you make any decisions. So if I were you right now, I'm going to exercise patience to see how price is going to react to this trend line right here, or to see price break out, make a retest, or maybe go up. So if I were you, that is what I'm going to be looking at to do. So at this medium right here, I can't see any technicalities from the day chart. Even though if I can see technicalities on the day chart, I'm not going to rush in right here. I want the technicalities to conform with the trend line to see a break of market structure. So if I can't see a break of market structure, based on what I can see right here, lower low, right here, higher low, right here, higher low, right here, higher low, there could be what? Higher low right here. For what? For an uptrend. So why should I be taking or going against the trend when the market is still showing me a bullish market structure? And number two, if I'm going to be going against the trend, what are the factors that shows the reasons to go against the trend? Then it must be a strong action. It must be a strong signal, and that strong signal should be on the higher time frame than the 4-hour chart. So the question is, can I see that on the day chart? The answer is no. Can I see that on the weekly chart? The answer is no. And if I still want to insist to take a trade for a short entry, what is the risk reward ratio? The risk to reward ratio is 1.8, because the best one to put my stop loss should be high of this resistance. So 1.4, is it reasonable in terms of risk analysis? The answer is no. So the probability right here giving us the signal, or the probability that the trade will not go in a downtrend, is higher than the probability it might go in a downtrend. So that is my view on gold. Right, so my trade disclosure, I'm still holding on to coffee. I told you guys I had a trade on coffee, and the trade is still active. The trade is still going down right here. And there are Tesla as well. I'm still holding on to Tesla right here, and Tesla is still going up, still holding. So these are the trades I'm currently holding on to. I am currently out on GBP paired against the AUD, because actually what I did was my stop loss was at this point. My stop loss was at this point right here. At this I right here. I trade my stop loss all the way down to this structure right there. So I never expected the market to come down to this level right here. So the market came right here. So I was out. I made another short entry. So the market was out on the both trade. So what I did was I trade my stop loss from this high right here to this level, trying to reduce my stop. So I got in at exactly this level right there. So my trade was trade close in slight some spread. So which isn't a really big loss for me, because I already trade my stop loss all the way down. So for now, this market is going a ranging medium. So for now, the market is not yet making the decision where it's going to move to. So it's better for me to be out in this type of a crazy market. And this is what I always tell you traders. This is a crazy market right here. So the reason why I took this trade, I was trying to play an aggressive entry. And I told you guys I took this trade on a different account, not on my portfolio trading account. I took this trade on my back-tested trading account. I told you guys, if you have been following my videos, I told you it was on a back-tested trading account, not on my portfolio trading account. So I have separate accounts, and there is one of the ways as well you trader can try to monitor, keep track of the strategy that works best for you. So I have different accounts, but I also have a different trading portfolio. Those are my trading portfolio. I take trades that conforms to all my trading rules. And any strategy I want to play out, I want to test, I test them on my back tested accounts. Right? So for now, this currency right now hasn't made its decision. It's still going up and down. So it's still crazy. GBP is still crazy at the moment. So I'm still holding on to my coffee and my Tesla trade. So let's hope we are gonna see our trade setup. And the oil as well, what I'm seeing on oil, to me, oil is still going crazy, because what I'm still seeing on oil right now, oil is still going crazy. Based on oil, this is what we have. So the market now is going crazy. I kind of find it difficult to understand this pattern. This is an upswing. Let's get this off right here. So this is an upswing right here. I shorted down right here. I told you guys I had 4 shorting positions, which I won on this trade. Market went up again to this level, and then again. So what is market trying to do? Is it going to continue to the downside? So at this medium right here now, the market is crazy to me. So the market is going to bounce up and down and down. So I'm carefully studying the market to see what it's going to do, because market can still come down and still rally up. So the market is not going to take the profit I've made right here. The market will never take my profit. And I made a lot of profit on this trade right here, right from this entry, first entry right here, second entry, third entry, fourth entry. I had an entry right here. It was a losing trade, so I was able to clear out 4 winning entries. So since the market is trying to set trap for the chips and the goats in the market, because the market knew a lot of traders made money in this downtrend. So the market is trying to set traps in order to get back the money. So I won't be a victim. I won't be a victim, right? So I'm wise. I'm a wise trader. I won't be a victim. So I'm not a cheap. I'm not a goat. So my profit, I'm going to keep my profit. I'm going to withdraw my profit, right? So that is it. Okay, guys. This is what I want to show you. Volatility 75 index. Wow. I don't trade this. Volatility, our ask traders always ask about volatility index. No, I don't trade volatility index. But let's see if we can. Now Euro AUD is going down, so volatility index is volatility all. Let's check it all. Volatility index, I think this is it right here. Volatility index 75, right? Do we have that right here? I think this is it right here. Volatility index, no features. Let's see if we can add a chart right here. Volatility index. Is this what you guys got? Volatility index. I'm not sure this chart. I do not trade volatility index, so I don't know if this is the right index. So I'm gonna try to search again. Volatility index. Let's check this out. So I do not trade volatility index, so I'm not a trader of volatility index, so I can't really show. Maybe that is the rate chart or whatever. So for now, I'm not a trader in volatility index, so I won't be able to prepare analysis about that. So sorry about that, Shields. So sorry about that. All right, guys, gotta go right now. So I'll be right here. That will be Thursday, 9 p.m. in the evening, and then tomorrow you're gonna be live. That will be 12 p.m. West African time if you are from London. Oh, a lot of traders requested GBP USD. I already gave analysis about GBP USD, so I can go through Euro USD and the Australian dollar paired against the JPY. So let's go through AUD. A trader requested for AUD and Euro USD on YouTube. So let's go through that. So before I'm gonna proceed with the analysis, Bolarinwa Adebayo. So are you still live right here? Let me know if you are live. Say yes, yes, if you are still live on YouTube so that I can give you the analysis. I can go through the analysis, right? If you are still right there on YouTube, Bolarinwa Adebayo, signify by typing yes, reply with yes. Then I will go through analysis and I'll go through the AUD yen and the Euro USD requested, right? So we have a trader requested for AUD yen and the Euro USD. So waiting for the trader to make a response, right? I need to be sure if you request for any analysis that you are still online. I don't want to give analysis without the trader requested for it not on in the live stream, right? So just a fast summary on this. AUD yen, based on what I can see, I prefer GBP USD to Euro yen because based on what I can see right here, I can't see a nice technicality setting up right here. So I can't see a nice technicality setup on AUD, on Euro yen, on Euro USD. So if we can still see a pullback to this level, be rejection to the upside. But I prefer the technicality on GBP yen, on GBP USD. So the setup on GBP USD is still enticing, technically still stronger than what I can see on Euro USD. So I'm trying to build up probabilities, not just chasing the market. I'm not chasing the market. This is for traders who chase the market. So for traders who look out for technicalities, no one will be willing to make an entry. So based on what I can see on Euro USD, it is better to wait for a pullback. Maybe if this broken ascending trend line of this rising channel, if it could act as a dynamic support for price for rejection to the upside, right? And then you could apply your Fibonacci retracement too, maybe from the swing higher low right here to the structure right here, and trying to find out the point of intersection. So but for now, I'm not interested in Euro USD. I'll only be looking out to see what price gonna offer. If price can make a test of this upper resistance trend line right there, maybe for a rejection to the downside, right? So at this medium right here, I'm not interested to do anything on Euro USD because there isn't any technicalities right here. There isn't any technicality at this zone right here. So nothing right here. Just money, just watching like a cinema. And AUD yen, let's check AUD yen. AUD yen right here. AUD yen, I told you guys, for those of you who want to chart, a lot of people actually want to chart AUD yen yesterday, and I told them the risk reward ratio is not favorable. And what happened? The market continued upward. I gave analysis about it yesterday. A lot of traders were saying, oh, they want to chart, 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 they want to chart. AUD yen is going down, going down, going down, going down. Now, is it going down or is it going up? You can see traders who got in yesterday, they have been trapped. And they have been in a bearish trap. The market continues to the upside. So it's not just about trading breakout. In fact, this is not a breakout. This is not a breakout. This is not what we call the breakout, right? So there's no volume right here. The market continues to uptrend. So AUDN, based on the trend line, the market is still active. The market is still active, continue to the upside. But based on what I can see on volume, technicalities, and strong price action signal right here, I'm not going to be willing to trade this pattern right here. I'll only be interested to see what price has to offer at this level. If I can make a strong bull breakout, a retest, and then continuation, right? So that is what I see on AUD yen. Anyways, I have a lot of nice setup which are better than all this asset right there. But based on what I can see on AUD yen, this double bottom pattern right there could be a nice entry, a nice interest for more buyers, because the trend on AUD is in an uptrend. So in an uptrend, if you have a double bottom in an uptrend, it tends to signify more bullish sentiments, just like what we had right here. As you can see right here, we had a inverted head and shoulder. This was the left shoulder, the right shoulder, and the head, the right shoulder, and this was the neckline. Price broke out, it continued to the upside. So this could be a nice double bottom to play out. The neckline, a breakout to the upside. You can see. So these are the continuation patterns. So just like what we had right here, an inverted head and shoulder chart pattern that resulted into a bull continuation. This could also occur a breakout of a double bottom neckline for more bull continuation, right? So that is what I can see on AUD. So the best one to have your stop loss in this market, if you want to be trading this pattern, is to have your stop loss at this string low right here, XL right here. And if you want to be making your entry should be at this TP structure right here. So ask yourself, before the market get to this level, is it up to 2 risk to reward ratio to R? Ask yourself that question. If you're able to make that, that would be good, right? And if you still want to make an entry, if you still want to make an entry right there, then you have to play a defensive game. A defensive game means as the market goes up, you trade your profit. This is an example of a defensive game right there. So if I were to be a trader right here, I wouldn't have been traded to take this entry right here, because taking this trade right here is close to resistance structure. So if you have your stop loss right there, and before the market got to rejection right there, it was at the level of 1.38. So if you were still waiting for 2 risk reward ratio right there, the market would have reversed your trade down. So the best way right there is to have trade your profit to play defensive game. So the same thing is applicable to AUD yen. If you want to make an entry based on what we have of this double bottom pattern, because I know a lot of traders like to trade patterns. If you want to make an entry right here, your stop loss should be at the low of this double bottom, and then to the high right there is 1 risk to reward ratio. You can see that. So if you have that view that, well, the market is rising, the market is in an uptrend, so there's tendency for market to carve a higher high, you are right, because right here we did add a higher high right here. That was a higher high right here, and then that was a higher high right here, and then right here that was a higher low, and then this could be a higher low. So if you have an idea price could rally up, that is nice. But at the same time, you need to understand that nothing is impossible in the market. The market could rally to this level and then break down. So you have to play a defensive game. Play a defensive game. And then why should you play a defensive game? This is based on what I can see on the higher time frame. So on the higher time frame, based on the day chart is showing us a bearish engulfing candlestick. So the bull move on the 4-hour chart could be a pullback into the bearish engulfing candlestick, right? For traders who want to reduce their risk, because whenever you have a technical signal bar, there are some traders who wants to get in at a better price offer. So if I'm not going to be looking out for a short entry based on this bearish engulfing bar right here, if a lot of traders might have placed a lot of sell limit order. So in order to take the pullback of this bearish engulfing bar, because if you made an entry based on this bearish engulfing bar right here, and you have your stop loss right there, this could be too high. Before you get to the support structure right here, the next support structure right here, this is 1.3. So a lot of traders might have placed a sell limit order so that they can have the minimum 2 risk to reward ratio, right? So if you are trying to trade that, you also have to put that into consideration, because a lot of traders might have set a sell limit order. This is what we call a trap. So by the time you are actually longing a position right here, when the market gets to a point of limit orders, whereby the volume of the limit order right here is higher than the buy orders, then the market will go down. This is what makes the market to go up and down. When the forces of the bulls are higher than the forces of the bear, what will happen? The market will go up. And when the forces of the bears is higher than the forces of the bulls, the market will go down. So based on what I can see right here, if there's a lot of sell limit order right here, which is higher than the buy orders right here, the market will go to the downside. So you also have to put in consideration of that. So based on what I can see, if you are trying to take a double bottom on the 4-hour chart, and the day chart is telling you there's a bearish engulfing candlestick at a resistance structure of a high. You can see that we have a resistance structure on the 19th of June 2023, and this is a bearish engulfing candlestick. So if you are trying to take a pattern based on the bearish engulfing bar right here, you have to be very careful of whatever you are doing. You have to be very, very careful, right? So if your initial position should be one standard lot, then you could divide your position into 2 or divide them into 4. So you could be looking out for maybe 0.5 or maybe 0.25, because there is a potential strong technical signal, because a lot of traders are going to be willing to short this bearish engulfing bar, right? So this is what I can see right here. So if there wasn't a bearish engulfing bar right here right now, I could say, okay, yes, there isn't strong hindrances that could hinder this setup right here. But anyways, if you want to go long based on what we have, make sure you analyze your risk. And the best zone to have your stop loss in this market is at the low of this like a doji or candlestick right here. XL should be right here, and then you target it all the way up. Anyways, since I have other currency pairs that has a nice technical price setup, so I don't see reason why I have to still force myself to take this type of trade that has a lot of conflicting signals acting against one another, right? So that is my view. So in summary, if you want to be taking this double bottom pattern right here, make sure you analyze your risk. If you are going to be making an entry right here, your stop loss should be at the swing of this slow, because the market could still gravitate all the way down right here to continue upward. So if you're having your stop loss based on the low of this bull candlestick, the market can go down and still cut you off and continue upward. And then if you try to combine this pattern of this pullback, it's possible we have what we call an inverted head and shoulder. This could be a left shoulder, the head, and the right shoulder, and this could be the neckline for breakout. So that is how I analyze the market and then set my stop loss. So if you are that type of traders who tend to measure your stop loss based on pips, so if you are that type of trader who measure your stop loss based on 20 pips or 50 pips, you're gonna lose this trade though. So the best way is place your stop loss based on where the market will prove your analysis wrong. So the question now is, where will the market prove your analysis to be wrong in this uptrend? The market will prove your analysis to be wrong at this low right here. So this is where you put your stop loss. So if the market should come down to this level right here, it means the market is going lower. And the market will still come right here and then continue upward, and then gives us what we called triple bottom. So the market could still come down and give us what we call a triple bottom, and then come right here and then continue. Then it could be first bottom, second bottom, and third bottom. So you can see the market is complex. It's not so as simple the way the media or the so-called or pro traders or call it to be. So it's based about probabilities, and you tend to go with the setup that has the best or nice or lowest risk to high reward ratio. So if I were you right now, my stop loss, if I want to take a trade, would be right here. That would be, I'll try to put my stop loss at this structure, not at this tip right here, because the market could move right here to hit this tip and continue. So I'll put my stop loss right here, and my take profit will be ×2. So the market could still gravitate down, up, left shoulder, right shoulder, and the right shoulder. This could be head, right shoulder, and the left shoulder. So this could be left shoulder. You can see that. And alternatively, price could come down and then give us a ranging medium. Right, come down and then continue and then break out. I already give analysis on GBP USD. If you missed the analysis, go on my YouTube channel to watch the live stream. Right, thank you guys. So I got to go right now. So we'll be right here tomorrow, 12 p.m. GMT +1 West African time. If you're from other country, try to convert their time zone to your country's time zone, right? For traders in London, that will be 11 p.m. in London. Thank you guys. Looking forward to seeing you. It's possible I might come online in the evening, so I will let you know in the Telegram group. And this is why I always encourage you guys to join my Telegram group. This is where I give updates. So whatever I'm gonna do, I will always post the updates in the Telegram group. Thank you guys. So looking forward to seeing you in the next live stream. Peace.